Good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Tuesday morning. And well, all I can say is here we are. We're sitting here on a Tuesday with the market rallying as I guess oil rebounded a little bit. We'll get to that in a second. But first, January 23rd, 9:30 a.m., that's a Saturday morning. Adjusting positions and risk management we'll go through. Basically, we're going to go through walking different ways to adjust positions, conditions where you want to adjust positions, why you might want to adjust instead of just close, all of that kind of stuff to kind of, well, sort of to help you through the tumult, essentially, of what we've had over the last couple of weeks. And with that, for all gold members are higher free at Option Pit. For Option Pit Live people, you get the live broadcasts, right? So everything live at Option Pit you get. And for all of you who are new to Option Pit, you sign up, and on we go. All right. And with that, let's get going. So let's just start right away with VIX, and let's just price a couple of things we've got. So right now we have VIX trading 22, right? Markets up 1% today. If that lasts, honestly, like anybody, I have no idea. It seems very stuck to China and oil right now. Oil is up fractionally. I think it did see it touching below 30 here. I'm going to take a look in a second. Overnight, I think before whatever the terrorist attack was or anything like that. Yeah, it did 30.5. The futures, the CL futures. So it's again just trading 38 last week. So it's not going good for oil. Remember, that has been destabilizing mostly because of credit worries. But here we are at a 22 VIX. So let's just decipher what that is, right? So that is, let's call it 1.5% per day, something like that, for the SPY. And let's take a look at what we've been doing. And again, we had a big spike yesterday, I believe, like midday. Let me get the I want to get my tick chart up. Let's do 5-day with volatility and handy feature and live vol, just so you can always see what's going on. All right, we got over 27, right? I believe we're touching, just getting up there, right? And from there, we've had literally a 5-point drop in VIX. That's all I can say is that is hugely substantial, because the market was on the verge, I would say, panicking a little bit, and reversed. Now the question is has the volatility really stopped? Well, ring ring. The only thing I will say is since almost everything is happening on the overnight with China and oil, and almost nothing matters as far as I think fundamentals, right? Because we've had better data, right? So you've had some better fundamental data in the U.S. and I guess China. Nobody actually knows what's going on there, and I think that's part of the problem. So what we have is we have started having spikes to higher volatility, and it looks like that we're going to continue to have those until the reason for them being here is gone. So oil has to find some kind of a bottom, has yet to do that. The Chinese thing has to get to some sort of stabilization. we might be trading it at 20 VIX for, I don't know, 3 weeks, 4 weeks, a month, 2 months, who knows? Because one thing that you've noticed is, again, it's something that we said at the beginning of the year, while we're not crashing, right? We're not trading 1800, not trading 1700. I mean, the market's not crashing. It's definitely a lot more volatile, right? So these numbers we've seen here, if we look at the last year, I mean, this is the first 6 months. This is the last 6 months. The big difference between this and this is the Fed's out of the market. China has slowed down, oil credit crisis. All of these things, none of these things have actually gotten fixed, right? And what dragged us up were the leaders like, Amazon, Google, Facebook, stuff like that, Microsoft. Apple at least is back to par, back to 100. So that's pulling the indexes up, but is it enough to make us really rally farther? I'm still having a hard time believing it, unless something becomes more clear as far as, let's say, China goes or the price of oil goes. At least if one of those things starts to clear up, we can start seeing the volatility settle down. Right? But just, if you're noticing how many spikes we've had above the 20 handle, this is a lot. Right? I mean, you're looking, even in 2011, we had that one big spike and we had a couple of bounces, but everything kind of slowly came back till the end of the year. We got a little bit of that, but, it's just not going away. And I think it's not going away because the underlying currents are not going away. So trades that could work. I think anything that has gamma, for the most part, has been working. You just have to work on ways and minimizing whatever the case. That's the short answer. So at Option Pit, like in the chat and things like that, that's really what we're looking at, right? There's still gamma, right, to be had in oil because it's still moving. The big indexes, you can find trades that are gamma friendly that are working. So you just have to keep looking for those types of trades, right? I mean, and let's be reasonable here too. Let's look at the realized vol. Right. You're now the 20-day realized vol. Okay. Is right around 19. That's the average. So while VIX is expensive, let's say, it's not hugely expensive, right? Because we're moving, and as of right now, we're not. The moving isn't stopped. So anything you are trading, you have to plan for the 1 to 1.5% move per day minimum around the at the money. So those are the trades that are going to have the best shot to work. You have to assume those trades are going to happen. You're going to have to assume things are going to move, right? And they'll pull the plug on volatility eventually, maybe back down to 18. If something clears up, China clears up, oil clears up, something, or at least there's some transparency again. Right now, all too cloudy. All right, everybody, have a good day, and we'll see you in the chat today.